The 10-year bond yield in America has gone past the 4.9% mark and it is at its highest level in almost 16 years. Similarly, the 2-year bond yield has reached a 17-year high over there. Now, if you look at India, the 10-year government bond yield is around 7.35%, which means the difference between the American and the Indian bond yields is only about 2.5%. Now, Durgesh of Indore is a little excited after hearing this news. He's wondering whether Indians like him can get any benefit from the rise in American bonds. Can Indians invest in US bonds? Well, the answer to Durgesh's question is yes. Indians can also take advantage of returns by investing in American bonds. Companies or corporates raise loans from common people through bonds. The return received on this bond at the market rate is called the yield. Now, apart from the yield, one advantage of investing in American bonds is that US bonds pay interest or returns in US dollars. The dollar appreciates by 3 to 4% against the rupee in a couple of years. That is, if the yield now is around 5% and after 1 year, you get the benefit of currency appreciation of up to 3%. Then, the total return can be above 8%, which may be more than many Indian bonds. Now, Indian investors can invest in US Treasury bonds through the exchange traded funds, that is the ETFs. Similarly, there are many fund of funds of Indian mutual fund companies, and by investing in them, you can take advantage of the rise in the American bond yields. For example, Bandhan Mutual Fund recently changed the name of India's first US debt ETF fund to Bandhan US Treasury Bond 0 to 1 year fund of fund. It is an open-ended fund of funds which invests in foreign index funds and ETFs. Aditya Birla Sun Life Mutual Fund has also launched Aditya Birla Sun Life US Treasury 1 to 3 year bond ETFs fund of funds. Additionally, you can open a brokerage account for the US market through a fintech platform and invest in bond ETFs there. You can also invest in treasury bills, corporate bonds, and treasury bonds in the US secondary market through these brokers. Speaking on this, certified financial planner Jitendra Solanki says that investing in foreign markets is a good idea for diversification. Bond prices move inversely to the yield, that is, when bond prices fall, yields rises, and when prices rise, yields fall. Solanki says that the rise in American bond yield means that when it changes its direction, there will be an opportunity to earn good returns, but one should be very cautious while investing in the foreign market. Sometimes circumstances turn unfavorable. This investment also has a cost. The return depends on the bond market of the country in which the investment is made. If Durgesh has made up his mind to invest, then it is a good thing. Experts say that for his diversification, this should be only 10 to 15% of his investment. Not only this, if an Indian sends more than 7 lakh rupees to America, then a 20% tax collected at source is levied. Now, apart from this, foreign brokerage also has its own commission. Investors like Durgesh should invest only after calculating such expenses, risk, and the return.